Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, March 22nd, 2024. Great to be here with all of you. Before we begin, our usual disclaimers. Obviously, nothing discussed is accounting, investment, legal, or tax advice. Everything David and I believe our jet-setting Josh will be joining us shortly. It's certainly our opinion and perspectives, and not necessarily the opinions and perspectives of our respective organizations. One more to add to that, David and you and I spoke about this. One of the things you and I often do is we talk about specific tokens and the use cases. Just for the audience to be clear, there's no way to imply that those are endorsements of those particular tokens. Please do your research, and none of this is investment advice. For those of you joining us on LinkedIn Live and Twitter, thank you for being here. If you have questions for David and I and Josh, post them in chat. We're happy to address them as quickly as we can. David, good to see you, old friend. The wild ride continues.
Yes. I'm down here in Florida this week, and nothing's been more wavier than the market this week, and especially the last few days. And it's been really interesting what's been going on, and looking forward to diving into that more today too.
I do want to point out that your weather prognostications are at least as good as your target price prognostications. You left right before we hit 24 degrees in central New Jersey. So thanks for that. Josh, good to see you. Thanks for joining. And Josh can't hear us.
No.
We'll come back.
Yeah, I was very happy to miss the cold front that came in. Looks like I've had some good runs with timing this year, both on the markets and the weather.
You are freakishly lucky, my friend. There's a lot to cover. I want to dive into it a little bit while Josh is working on some of the sound issues as well. We'll get to some of the legal and regulatory stuff. When we talk about the price action, David, you and I have this conversation almost on a daily basis. BTC touched 70,000-ish as an all-time high. We've begun to see, I would argue, a plateau of the spot Bitcoin ETF purchases. Where do you see this trend from a price perspective? I think we touched down at 53. We're down 10% plus from the all-time high. And what's driving that kind of moderation of price?
Well, look, I think there's a couple of things at play. One is, I think a number of people were surprised by the volume of selling in GBTC over the last couple of days. So over $1 billion worth of GBTC was sold in the last 3 days, has been reported. And I think the majority of people thought the bankruptcy selling was finished. So it's not clear if this is selling related to the deal that was reached with Genesis and Gemini to return funds to Gemini's earn holders, because supposedly around $2 billion worth of value is being returned to those holders. But I think that generally has been the surprising factor. I think because retail has really been driving the buying of the ETFs, and as we've talked about, the wirehouses have not allowed their clients to get on the platforms yet. You're seeing like a run up to that, those purchases. And so I think they're going to ebb and flow a little bit. Yeah. And so maybe what we're seeing in the short term is there was a lot of buying right away. People were waiting a long time to get access. And then they decided after a little while, maybe there's just a little moderation in that. But I think really it's the selling of GBTC that's really been sort of anchoring the market down a little bit, and most likely some selling of the miners as well, who are probably trying to get as much liquidity as possible prior to the halving.
David, thanks so much. I know Josh is having some problems. I don't know if she can hear us, but we can see her. She will leave and come back. Technical difficulty is always fun, David. Let me go back to something else if we could. And again, you and I talk about this quite a bit. You mentioned the GBTC outflows. And for the audience, a lot of it, I believe, was based on the idea of their fee structure was pretty high relative to others. And, we don't get into the tax implications of potentially those switches. But what I would ask is, do you think we're hitting the end of the runway on GBTC sales?
Look, I think at some point, maybe in the next week or two, we'll see the exodus of the heavy selling. I think there's always going to be a little bit of in and out every day. But right now, GBTC is charging 150 basis points, and the other products are ranging from, I think free to 30 basis points. So economically, it would make sense to go to a lower cost provider. The one element that people haven't been talking about so much is that some people have really large gains. And so by switching, selling GBTC and buying another ETF, they would, have to take those gains. And I could see people being willing to pay the extra fee, not to have to, have a gain, hundreds of thousands or millions of dollars. So I could see that holding some people off.
Yep. I see Josh smiling. I assume that's because she sees and hears us.
Yes, I finally do. I'm sorry, guys. I was
No
in
worries.
some other world, apparently.
No worries. Good to see you, Josh. Welcome to the program. It's good to have you back.
I hope I wasn't scowling or something.
No, you had your inquisitive look on.
Yes.
It was interesting. We were just talking about some market stuff, and David, I want to peel that back just a little bit more, and Josh, want to pull you into the conversation as well. The one thing, David, I want to add to that, when we look at the GBTC outflows, and we kind of look at the drop off of the BTC high from 70K, I know people are looking at this and saying, oh, it's an 8% or 10% drop, but I don't know about you, but I was pleasantly surprised that it's holding 50, 55, 60, give or take the flows that we're seeing. Is that the kind of base of liquid support in BTC that you think is part of this market evolution?
Well, look, I think the support levels move as the market moves, but I think there's significant interest at like the 55,000 level and the 60,000 level. And I think, we trade in ranges. And so, we may trade between 62 and 68 or 64 and 70. So really what happens is, where are people going long in leverage and where are people going short in leverage, and where are those really hot areas? And those are sort of the boundaries that we pay attention to. But I think a lot of people have missed this run up. So I really think there is a floor, in the sense that, barring some black swan event, there's a floor where people will want to get in where they missed getting in.
Yeah.
And I see like 55 and 60 being two of those spots.
Yeah. David, thanks so much. Josh, let's pull you into the conversation. As the Learjet parked and you came home from your overnight trip, I know you've been traveling, obviously in the backdrop of all of the market activity that David and you and I talk about, is still the ongoing judicial proceedings that are happening in the space. One of the things that really caught everyone's eye was the sanctions on the SEC by a judge, I believe in Utah in the debt box case, which really was pretty astounding, because it said and I'm going to paraphrase, but you please explain it for us. It basically said, like, this is almost a top-down approach at the SEC, and the sanction was pretty scathing. What did you think about that when you read that, Josh?
I mean, it definitely not just grabbed headlines, but I think, really made us all sit up and take notice. Now, I think credit is due certainly to Jason Gottlieb and all of those who worked so hard for this. I think it's the language that the judge used was very strong. I mean, the words were a gross abuse of power, right? And so I think, again, we'll see whether this has a material move or moves the needle on Chair Gensler's approach, right? But it certainly shows that the approach cannot the regulators cannot proceed with impunity, right? Yeah. And there will be consequences. I mean, here Deadbox had to. I mean, the lawyers' fees were paid by the SEC, right? They were ordered to be paid. I just think, given the facts, and we've talked about it on a prior, wrap up.
Yeah.
I mean, the fact that they were claiming sovereign immunity and saying, oh, well, we have trainings that we're now instituting, and that should be enough just to dismiss without prejudice. Mm-hmm. I mean, clearly the judge didn't agree. I think the opinion was something like, I think it was like 80 pages long or something.
Yeah. Josh, thanks so much. David, please weigh in on this as well, because you're right, Josh, we have addressed it. One of the other phrases that the judge used, and again, David, I'm paraphrasing, but something along the lines of, this action and the kind of negligence, the gross misconduct upended lives. How did you interpret that?
Well, look, when you get a TRO, you're really basically stopping a company from functioning. In some cases, you're freezing their bank accounts. In other cases, you're preventing them from, operating a business.
Yeah.
And so it's really important in those scenarios that the facts presented to the judge, are beyond reproach, because the judge is potentially, preventing a business from operating based on these facts. Yeah. I think in a typical litigation, some of the facts may become a little bit more, less clear and can be argued on both sides, but you have to go in with really clean facts in the TRO. And I can see why the judge had the reaction he did. And it's disappointing, I think, for practitioners to see that, because you're representing your client zealously, but at the same time, your expectation is that, the other side is doing so the same way. And really, I think it merits a real kind of look at the practices and how cases are being brought and why they're being brought.
Yeah.
And look, in fraud cases, in active fraud cases, you need a TRO to protect against an ongoing fraud.
Yeah.
This wasn't the case. And, the judge called them out on their, on his view of their behavior.
And,
And
when go ahead, Josh.
I was just gonna say, and the consequences for Deadbox, I mean, were disastrous.
Yeah.
Because when you have these sort of these orders, right?
Yeah.
It's just one side, right? And it's supposed to be instituted because there's a flight risk or some other huge risk, that can't be stopped. And here, it's been reported that Deadbox didn't even know that the SEC was conducting an investigation at that time.
Right.
So,
and the upending of people's lives kind of thing, just to put that in practical terms, these are people not getting paid. These are people who have more, these are employees. These are people. So again, to your point about fraud, David, absolutely understood where TRO makes sense in that case. But this upended the day-to-day lives of people who have bills to pay. And it was just interesting to see that. David, it brings me to something else. I would love your perspectives on this, and Josh, certainly yours as well. David, we talked about it recently. Interesting, David, you said it best, or at least more eloquently than I could. It was, doesn't the SEC have anything better to do with its time? And again, I'm not minimizing the mission of regulators, not the mission of the SEC. But what's your perspective on that? Why is that an important conversation now?
Well, look, I mean, regulating markets is really important. But, crypto is, even at $2.5 trillion, a small part of the ecosystem. And it seems to be getting, the lion's share of attention, especially on the enforcement side. And, now the commission's asking for another $100 million in their budget for next year. And I think what I was saying is that I'd really like to see hiring done on the regulatory and the trading and market side, and really constructing rules around digital assets and things of that nature, and not just a constant stream of enforcement. And I think a lot of people feel that way, and that's punctuated by the disclosures that, informal inquiries have been brought to the Ethereum Foundation, and there are now questions about the, whether Ether is a security. And, and I want Josh to weigh in on this too, but like at some point, action needs to be taken. You can't let something sit for 6 years and then all of a sudden decide, now we're going to bring action. And even though Ether changed from, its original mechanism to a proof of stake, system, like there needs to be a period of time. Either this is or not. And waiting this long to bring a case like this just doesn't seem to be serving the greater good.
Josh, go ahead.
I mean, I would just say not even just waiting this long to bring a case, waiting this long to bring an investigation. Right. I mean, that's what's really, like, obviously the case, like if there were a case brought, that's a whole another can of worms. But I mean, I believe the Ethereum ICO took place in 2014, right? Yep. And I do recall in discussions, with staff members in the past from the SEC, when sometimes people would say, oh, well, Ethereum does this, right? I did get responses like, well, we never gave Ethereum a no action letter. Nevertheless, time has passed. Right. Nevertheless, Ethereum figured strongly in the, I believe, 2018 speech by Director Hinman.
Yep.
I mean, the whole basis for whether something could be sufficiently decentralized, was Ether. And yes, I would say in connection with the merge, we all heard Chair Gensler making noises that, that staking in that context, when you didn't have a proof of stake system up and running, that in his view, it might look like lending or something like that. Mm-hmm. But even that was a while ago.
Yeah.
And I mean, to me, when I see this, it's what comes to mind is a whole bunch of things that I'm sure is not unique to me, but, with the success of the spot Bitcoin ETFs and now the pursuit of the spot Ether ETFs, yep. Right? And the letter from the two senators, including Senator Reid, urging the SEC not to approve any more crypto ETFs. I feel like it's all together. It's all like they're not necessarily happening just randomly. And some have said, I don't know that this is the case, certainly others, including our WSBA policy gurus.
Yep.
But I've heard suggested that, Senator Reid, one of the authors of that letter, is quite close to Chairman Gensler.
Yeah.
Now, what I've learned just from you guys and from others in our space and from our policy gurus is that often when these letters are publicized, the people who are receiving the letters already know they're going to be receiving the letters.
Right.
And sometimes it's strategic. Yep. So to me, it's part of a larger mix. And I do think the mainstream success of the spot Bitcoin ETF is partly driving us.
Josh, David, thanks so much. I do want to hit this question. James Strode, our friend over in the UK, over at GLI, the difference between the UK approach and what is going on in the US is unbelievably stark. When do you think the SEC approach will change? David, I feel like there's an election conversation coming up. I don't know the answer to James's question. I don't know that anyone does.
Well, look, elections matter. And just speaking solely on a crypto basis, it would seem like if the Republicans took over the Senate and the Republicans were leading the Senate Banking Committee, it seemed like the attitudes regarding crypto would likely change. Also, again, it's been rumored that the Biden administration is not a fan of crypto. I rely on our policy gurus for the comments on that, but it just seems that there continues to be a hostility towards the space. And I think a number of us hoped with the Bitcoin ETF, and it's been running smoothly. I've not seen one real article saying that it's, the pricing isn't fair or anything is, not working properly. The only thing I've heard is that maybe the futures are being pushed down a little bit so that when purchases are made after market, they are made a little lower, but that's just pure speculation. And so if we've seen this working and, we have a framework now to have these ETFs and we have big sponsors who are involved in them, do we want the government preventing individuals from having the choice to buy it or not? It just really makes me wonder.
You and I have that conversation a lot, old friend. Again, James, thanks for the great question. For the audience, again, thank you all for joining us. Those policy gurus that David and Josh were mentioning. Shout out to our friend Dina Ellis and Adam Goldberg, WSBA members from Paul Hastings and S&P Global, respectively. Every month they do a policy update, and they've forgotten more about the goings on in Foggy Bottom over there than in DC, than the swamp that some people call it, that I ever will. We will be there, the three of us and several other WSBA members, April 16th and 17th. So we will report back. Josh, I wanted to come back to you with one thing, because at the start of the conversation around is ETH a security and SEC perspectives, and again, respectful of the SEC's mandate, one of the things that always catches my eye when I see these things is what I'll broadly call the economic impact of these kind of regulatory decisions. And hear me out and tell me if this is not the best way to focus on it. But when we look at the world since 2021, 2022, FTX happened in the background and imploded while the SEC was on watch. And again, that's not meant to be a criticism, just recognizing the economic impact. Celsius happened. Some of these other issues that have happened that had real negative impacts. Does the SEC not look at the impact of potentially making ETH a security 8 years later, when hundreds of different platforms are on it, millions of different customers use it, it's got multiple use cases, it's a much bigger ecosystem now? Does that not weigh into the calculus of regulators?
I mean, I would say the regulators are not monoliths, right? So I think individual regulators and individual staff may have different views. Certainly there's a wide variety, and some are very focused on things like that and what the overall impact would be. I frankly think that that's why Director Hinman's speech in 2018, why it came down the way it did, right? Because the very harm that the SEC was trying to avoid, it would have caused by saying, and frankly, same thing with, if you think back to the Dow report, right? Even that talked about ETH, right? And it didn't say ETH was a security back then. I mean, listen, I don't know where this is going, so to speak. I don't know if it will ever lead to an enforcement action, right?
Yeah.
It could just be, again, just ways of throwing up obstacles or changing or trying to change perception about risks by beginning this investigation, if in fact it's begun. I mean, it's been reported on, but we don't know whether it's something where, okay, they launch an investigation and that's just to send a message, or whether it will end up somewhere.
Yeah.
So one
Go ahead,
one
David.
other thing. So there's two things I want to add in. So the Ethereum ICO ended in September of 2014. So we're literally on almost 10 years now.
Yeah.
At some point, the ship has sailed. I can't say how many years it needs to be, but it feels like at 10, the ship has sailed.
Yeah.
The other interesting idea I've heard is that, the opaqueness around Ethereum is somewhat intentional, because if the commission were to say that Ethereum is a commodity and Ether is a commodity, then it might undermine cases made against other ERC20 tokens.
Right.
And for those people who don't know, those are the tokens. That's the standard that underlies Ethereum. So that's something I've heard also sort of floated around. But again, I think the loss of value, like you both brought up, is significant. I think Ripple token holders lost somewhere in the range of $15 billion when the action was brought against Ripple. I don't know that would occur if an action is brought against Ether, but these are significant holdings by different parties, and it could have a real chilling effect on Ethereum. And I'm not saying anybody should get nervous about this. I'm just saying what one eventuality of this could be.
Right.
So I have a question, and maybe you guys are better placed than I am to know the answer to this, but how do we know definitively that this investigation is to determine, is trying to allege, trying to form the basis that ETH is a security? I mean, I guess there's also questions about whether certain things might be securities offerings, right? Just questions of that nature. But I also just wonder if in fact they could be possibly investigating just as part of the determination of whether to approve a spot Ether ETF and trying to discern whether there actually could be parties who might be exercising the outsized influence or something like that. And I do wonder, could that be a possibility, or has there been some information that it is more along the lines of like the New York AG alleging?
Yeah. I'll just share what I've seen in the I'm sorry, Josh. I'll just share what I've seen publicly facing information and talking to colleagues in the space. The tone and tempo of the requests for those organizations that participated with the Ethereum Foundation is very different than the level of participation the SEC had prior to spot Bitcoin ETF approval. Not a prosecutorial sense, but it certainly seemed investigatory around the idea of Ethereum being a security. I could be wrong. That's just what's in kind of the popular media reporting on this. David, I don't know if you see it differently.
Well, one thing I wonder is we have a futures ETF product.
Sure.
I would have thought if there were questions around the status of Ethereum, that those would have been addressed prior to the futures product being approved. And so now that these are coming up, unless there's something we all don't know about, it just seems a little strange.
Josh, David, thank you both so much. Everyone in the audience, again, thank you all for joining us. Please do keep the questions coming. Josh, I have to do it. One of the benefits of being a WSBA member, if you're in our legal working group, last week we mentioned Commissioner Peirce's dissent to the SEC ruling, and we had the privilege of watching Josh Klayman, our legal working group chair, and our co-chair for litigation, Kayvon Sadeghi, shout out to Kayvon, make their acting debut in the legal working group by going through the dissent itself. Again, Josh, really important commentary, and I thank you both. It was really great stuff. One thing we didn't put on the agenda I wanted to throw out there as well. It's coming up, the SBF sentencing. And one of the things, it's not on the agenda, and certainly, judgment has been rendered, but it's pretty fascinating looking at the disparate perspectives. I think SBF's legal team asked for 6 years or something like that. And the DOJ basically said, half a century, like 40 to 50 years. David, Josh, can you talk a little bit about, I know both of you aren't litigators. We have a lot of litigator friends, but why that huge imbalance? What is the perceptual reason here?
You want to go first, Josh?
Uh-oh.
So, I mean, as
Sorry.
far as why the huge imbalance, I mean, I think the DOJ, I'm sure, is trying to send a message to other folks who are out there. And I think certainly the defense is trying to show, the human aspect and saying, look at how much has changed. I do think an interesting question, and I've seen this raised in different forums, is the question of harm. Like, yes, it only took a very short amount of time for the jury to unanimously convict Sam Bankman-Fried of all of the charges against him. But as time has rolled on, and I'm not saying this in any way as like an exculpatory or, any sort of like thing like that. But when we see the market and when we see, yes, people lost money, right? Of course. But does the landscape look different in terms of harm now than it did immediately following the aftermath of FTX and the contagion?
Yeah.
Right. Because that's something that I've heard people bringing up more and more, that actually, how much really was lost versus like how many good investments were made and how much money is being recouped. So I do wonder whether that may play in at all. But it's something that I've definitely heard people discussing just as a sidebar.
David, weigh in on this. And one of the other interesting things, and Josh, you raised a really, really good point when we talk about economic harm. And I see where you're going with that when we talk about, certainly we're talking about the rise in crypto prices post FTX. And we can have conversations about Anthropic and kind of these very risky VC ventures that FTX made. I guess the justice weighs that in the balance of these hundreds of letters the judge has gotten from all around the world saying, I'm wiped out. I don't want dollars. I want my tokens. I'm not going to be able to get them. And David, we've had bankruptcy proceeding conversations about this. It is a difficult thing to understand. David, what's your opinion on some of this? And where do you think that, not wagering on someone's prison term, but where do you think this is all going to land?
Well, it's complicated, but I think we have to split it into two. We have to split into the behavior that occurred that, ended up finding him guilty, and the harm. Yeah. So regardless of the amount of losses that people have taken, what is the right sentence for the harm, for the malfeasance that occurred? Yeah. What is that core? And then I think if you look at that part of it, and then you look at, well, what is the harm? Regardless of whether people get 80, 90 or fully paid back on their claims, they're not getting what they had before. And they were without access for their money or value for, we'll say a year, could be more, could be less. So look, I think the fact that people will get almost all of their value back is a mitigating factor, but I don't know that it takes the crime and the penalty down to sort of 4, 5, 6 years. Right. I think the one that we also need to remember is that just because somebody gets a 15 or 20-year sentence, assuming good behavior, they don't really serve, they might serve 40, 50, 60% of that sentence. But ultimately, it's very interesting because it was not only a crime on individuals and a crime on, creditors or people who used FTX. I mean, there was a bit of a crime on the American public and sort of like funneling all this money that didn't belong to the organization and lobbying for certain things, within our, Congress. And so I don't know that that's a factor, a sentencing guideline factor, but, it's one thing to have run a business and to sort of been more than fast and loose in how you're using customer assets. But then to take some of those customer assets and then to really try and like lobby, Congress for certain things.
Yep.
Yeah.
I think it shows another level of sort of behavior that might warrant some additional time.
Josh, David, all good points, and I agree with you. The other aspect of this, I was curious about how you both responded, or what you thought. Bless you. When we look at the bankruptcy, right? And David, you and I and Josh have had these conversations before, and we look at what John Ray, I believe is Mr. Ray, as the head now of FTX as part of this restructuring. He came out with some pretty biting language about SBF, Sam Bankman-Fried, and his perspectives on it, essentially stating that when he got to FTX, it was a dumpster fire and there were only something like 150 Bitcoin. And David, were you surprised at the kind of tone and tempo of that? And does it matter vis-a-vis the restructuring at all?
Ultimately it is what it is. And I'm not really caught up in the dramatics of how it's sort of shared. Look, I think small and growing companies don't have, internal audit departments, don't have 10 people in CFO's office. And so you can expect some growing pains. But I think the fact that value is really fungible, and it was just moved, people's assets were moved all over the place and used however they saw fit. It goes to the mens rea of sort of like what was done and the thoughtfulness of it. The one thing that I find striking is if, Sam Bankman-Fried wanted to run like a VC fund, Alameda should have just done rounds, raised the money, said, this is what we want to invest in, and made the investments. And, they've been somewhat, they made some good investments. I think, I'm a big proponent of AI, and they've made some investments that have helped lead to getting customers' finances back. So, I think that's kind of the striking part, that like there was an infrastructure somewhat in place. And I think, Sam, based on his reputation at that time, probably could have raised the money to do these things. So it's a very strange case. But look, I think we should all look at it from this perspective, regardless of how many years he gets. It is good to know that, customers will be getting on a dollarized basis almost, 90 or 100%. And those are innocent people who really could use that value and use that money. So, like, I'm grateful for that. How we got there is a whole nother story.
Josh, go. Thanks, David. Josh, go ahead.
Yeah, I mean, I agree with everything that David said and everything that you've said, Ron. I do think, and again, this is not as an apologist for Sam Bankman-Fried or anything like that, but I do think it's a kind of an interesting thought experiment just to think like, okay, what if there hadn't been that tweet storm with CZ, right? What if there hadn't been that, all the back and forth with the other parties, without going to names. I won't name all the names, but we all know, because we all watched that unfold over a weekend and then the next week. If that hadn't all come out, what would that look like now with the recovery in the markets? Because I know back at that time, I recall being on stage and someone proposing that was Sam Bankman-Fried the next JP Morgan? Right? The lender of last resort because of the loans that had gone out. And I just wonder, had that not been uncovered, would the hole have been filled? Ultimately. You know what I mean? Would it have been correctable such that no one would know?
The one thing I would add is that, like, it feels like, just from everything that's been reported and everything, we've seen, it feels like there wasn't an intent to take money from people. And so maybe that is something that I think the defense will move on. It's like, it doesn't seem like he was siphoning off large amounts of money to buy things, personal things, or he may have siphoned off some, but it doesn't seem like there was an intent to defraud people on a massive scale. It's just the way he was using customer assets was obviously inappropriate. So it's really dynamic. And I think reading the papers of the defense and, DOJ's papers, I think you'll really see a tale of two stories. And,
Indeed. David, Josh, I'm sure one of you, we should get together and bid on the movie rights. I'm sure that's happening at some point soon. David, I'd love to talk a little bit of some of the macroeconomic stuff. And obviously, Josh would love your perspectives as well. We've got a few minutes left. David, you and I spend quite a bit of time looking at kind of the macroeconomic perspectives of crypto and blockchain and tokenization. And certainly, I've gotten way too wrapped up in waiting for the next set of government data. So next week we've got initial jobless claims. We've got another GDP revision coming, which will point to recessionary trends or not, and the PCE index, the Fed's preferred measure of potential inflation. David, what are your thoughts about the ongoing dialogue of will the Fed cut rates? Will they not cut rates? And what is the impact on markets, and what's the impact on crypto?
So
there's a lot there.
Sure. I think Chairman Powell made it pretty clear that he wants to cut 3 times this year.
Yeah.
And I won't go into whether, that's election related. Everybody, talks about how, the Fed is independent, but it just really feels that way. But one thing also is that maybe we've come to a place that for now, inflation at 2% isn't the goal.
Yeah.
And maybe, full employment without a recession is a bigger goal than inflation at 2%. And so on that point, I don't really take an issue with that because we still have these, we have the Ukraine-Russia conflict.
Yeah.
The Middle East conflict is relevant in terms of like the issue with shipping. I mean, it's important for many reasons, but for our conversation, the cost of shipping has increased. So, we have these, important headwinds, and the inflation has come down quite a bit.
Yeah.
I think the issue that we all face is that every time these numbers come out, they get redone. And, we'll see significant revisions month over month.
Yeah.
So I think it's really hard to look at monthly data when they're going to get revised and sometimes significantly. So I'm of the view right now that 3 cuts are what we're going to see. I think following the lead of a lot of economists. Cheaper money is better for speculative assets, and crypto is still considered in that sort of vein. So I think cheaper money means more money flowing into high yield debt and crypto, and I think it's a benefit for the liquidity in the crypto market.
Yep. I don't envy the task of the Bureau of Labor Statistics, but sometimes I sit back and say, you were off by how much? So it is interesting. We're almost out of time. Josh, you just flew back from the West Coast. I'd love to hear like what's the tone and tempo of conversations on the West Coast about blockchain and crypto. And you were at a very important event that I'd love you to talk a little bit about if we could.
Sure. So I went out for a GDC, which is Game Developers Conference, which is a huge conference. Obviously, I had meetings with folks and did different things alongside, but really going to the conference itself, I mean, the mood was just buoyant. And there were estimated to be over 30,000 people there. It's been estimated that that event will have like a $40 million impact on San Francisco alone. And one of the things that really struck me being there was this Web3 gaming. I mean, we'd seen a lot of skepticism in the past among game developers about, some obviously have been very much on board on the bandwagon about blockchain and digital assets and things like that. But others, were kind of skeptical. And I just think the moves that have been made with Web3 gaming, I mean, just people are excited about it. I think like some of the demos and other things that were available, I definitely will be back. And I'm just very, very excited about the mood.
Josh, are you a gamer? Do you game?
I game. I used to game. Well, let me say this. I wouldn't self-identify as a gamer. Like, so when you ask me that question, I'm like, am I a gamer? But when I actually think back, I mean, yes, so I enjoy games, but I also, when I was younger, I was discussing this with someone last night before flying back, going back to like Atari and then, PC Junior and Commodore 64, waiting for Hobbit
Commodore
to load, and then Nintendo. And of course, Zelda and Mike Tyson's Punch-Out and all these other things, and then traveling through. I mean, definitely my moves have gone more to like word games and shooting bubbles and things like that. Whereas I used to be like very into things that could take a lot of time. But yeah, I mean, I think there's all different, I guess, there's all different ways to be gamers. I do know that my, my kids, they play Roblox, Minecraft, like all sorts of things. And even my kindergartner, she knows what the other names of the people in her class are when she sees them online. Like,
The new world.
Yeah.
David, your gaming days and my gaming days go back to ColecoVision, and I dare anyone in the audience to look that up. David, what about you? Talk to me about the gaming space a little bit as we start to wrap up and the impact.
I am a big proponent of crypto for the gaming space. I think it's a natural fit. I think people owning their own avatars or whatever in-game purchases and being able to transfer them is the wave of the future. I've always been a big believer of that, and I see it accelerating. I mean, I might have played Madden and, some hockey, and had some, epic battles as well. I can't say that I really indulge in like modern day gaming, so to speak, but I think mine might just be watching, pro football and things like that. But I will say I think it's a tremendous use case, and I really see it accelerating here. That and AI, I think, are two huge use cases that I think we're going to really see, escalating in the 24 this year and next.
This makes me want to dig out the Commodore 64 from the attic. Thank you both. Let's wrap it up. David, as you get into the McLaren and take it out a little bit over the weekend in Fort Lauderdale area, what are you keeping your eyes on market-wise and legal and regulatory-wise?
Well, I was actually going to, test drive the Lambo SUV since everybody's been talking about it, but it's raining here, so I don't know if I'm going to do that this weekend. All joking aside, I'm really going to do a deep dive into more gaming and AI. I had thought that after the NVIDIA conference, we'd really see a bump in some of the AI tokens, and we didn't. And I'm sort of going to look into that market structure feature about why didn't that happen? Yeah. So I'm going to be looking at that. And I think just broadly speaking, I'm going to be watching the halving is coming. I think we're T-minus 3 weeks away from that. Yep. So I'm really going to just do a lot of research this weekend and have the NCAAs on in the background. And then hopefully, if the rain stops, go to the Miami Open while I'm down here.
March Madness in earnest. David, thanks so much, buddy. Josh, you're flying to Monaco next week, or where's the next trip?
I mean, I haven't looked in the calendar, but I do know I will be in London on April 15th, and then April 16th and 17th, I will be with you guys in DC. So very excited.
Excited as well. I will be working on the last bit of logistics for our Washington trip. It's going to be a great time. We're meeting with some folks in both the Senate and the House and having conversations with the staffers. We might have a surprise visit. I can't tell the two of you yet, but we'll figure that out. And we're also going to be meeting with some friends at the Securities and Exchange Commission. I'm deep diving on AI as well and how it impacts all of this, David. So I really appreciate it. Thank you both. It's always a privilege. For everyone in the audience, thank you for joining us. We'll be back next week. If there's any questions for Josh or David, drop us a note, info@wsba.co. Until then, have a great rest of the day. Have a great weekend. Bye.
Take care, everybody.